Hey Joe, how you doing, baby?
Mate, I'm doing really well. As always, how are you doing?
Good lad. Yeah, really well. I'm actually so excited today. I almost feel like overwhelmed with emotions because we're shifting over obviously to the bigger studio. Obviously, you'll see that next week.
Yeah.
Yeah, man. We just had a guy in today putting up the sign, the Stay Lit Baby sign, the TV. Man, it looks sick. He looks sick. So yeah, I'm looking forward to that. Yeah, so. That's kept us busy.
Nice. So the Stay Lit sign, we're going to be doing the podcast like in front of it.
Yeah.
Or we can do all sorts of stuff, can't we?
Yeah, exactly. So yeah, it looks cool. It looks really cool.
Nice.
Let's bring some personality to it. Yeah, man. But cool, dude. What's man? It's been a bit of a weird week. This one, really, quite dry.
Yeah.
I think.
Yeah. I think that's probably the best word to describe it. Actually, isn't it? A bit like. Yeah, dry, just not that much to like get your teeth into.
Yeah, considering what we've had over the past, we kept saying it, how we're blessed all the time with these crazy weeks, with themes and data, and yeah, it's just quieting down a little bit of consolidation.
Yeah, agreed, definitely.
So, look, let's start off with, at the start of the week, I'm just trying to gather my head around it. It's been a bit risk on. Then it had risk off, and then risk on again. All right?
Yeah. It's consolidation, like you say. It's just investors like weighing up. They're weighing up all these themes that are going on at the moment, like rising coronavirus cases in the US. But then you've still got dovish central banks like the Fed and all this stimulus from all the governments, and that's like keeping a floor under risk assets. And then there's like trade tensions, which gets people a little bit nervous again. But then, like you say, it's just consolidating. And I think we're just looking where we're going to go next for a lot of these risk assets like stocks.
Agreed, yeah, because I think, as you say, the markets are trying to find their feet. I think, we're battling between two big themes, obviously, that you've touched on. One, whether we should be concerned about COVID-19 cases rising in the US and globally. And then two, we're seeing a great bounce back with a lot of data points, right? Showing real signs encouraging. Over the last couple of weeks, we've seen strong PMIs like out of Australia, Europe, UK, US, good manufacturing services, all composite. As you'd expect, obviously, given the economies are back up and running again. So it's just they're just trying to figure out, should we go full-blown risk on? They want to, but there's a little bit of nervousness whether this could be a second wave. It's just it's a tricky one. But I think the breakout has got to be coming. It's coming, clearly.
I agree, mate. And actually, I've been having this kind of view that's been forming over the last couple of days that obviously this is speculation. Could anything could happen with markets, as we know. But we're talking about this second wave of coronavirus, and I think a lot of people are concerned that it's going to have a negative effect on the economic recovery. But I actually think that there's a risk, quite a big risk, that it actually doesn't have as much of a negative effect as people thought it would. So say we get to the end of July and we start getting all the July data from the US, for example, and it still comes out really, really good. Because, coronavirus cases are going up, but this time they're not doing these massive lockdowns. They're just doing it a bit more... Do you know what I mean? It's just telling the bars to close again. It's not as crazy as it was back in March. So
true.
I'm not sure how the economy is going to be hit.
I agree with you, actually, dude. I agree, and I think where markets kind of we've experienced this already in March, like the worst of it, the worst it could be, pretty much. I think markets now know in terms of the shock factor. They know what it's about. So maybe, as you say, it's not as bad. It's not as bad this time round. Even if we do potentially get hit with this second wave, it's not as bad. We know how to deal with it. People are potentially going to crack on. There's a vaccine eventually down the line being worked by a few pharmaceutical companies. So there's still some optimism there to carry us through. And all the central bank action, as you say.
Yeah, so true, man.
All right, let's, okay. NFP. Might as well talk about NFP. That was a decent beat, wasn't it?
Yeah, it was actually. It was, a second month where a record number of jobs were added to the US economy. What was it, 4.8 million, I think?
Yeah, 4.8 million.
So, really good. Definitely that spurred some risk-on flows. It's all... It's exactly... I thought that... At the time, I felt like I was repeating myself from back in June.
Yeah.
this NFP came out and it was contributing to expectations for a V-shaped recovery. So that is why we saw those risk-on flows at the time. And then there was a bit of nerves yesterday when those coronavirus numbers came out of the US, and then but then it wasn't risk off, was it? It was just we went back to where we were.
Bit of a correction. Yeah. Bit of a correction.
Yeah.
Oh, do you know what we could quickly talk about actually, because it was huge. I did a video and blog on it this week. The month end. That was insane, those moves.
Oh, dude, yeah.
Dollar got raped again.
Yeah, I mean,
same thing happened last month, didn't it?
Yeah, literally, bro. I mean, I think there's also something to be said about not just month end, but quarter end as well. Like, so obviously we won't get this now for another 3 months, but month end flows can, like we say, can be choppy as hell, but quarter end flows can be mad. And then year end and even half end flows, that probably, you know what I mean? There's probably even more.
Yeah, it's true, because I was thinking the last 2 months, because when I think about month end, I was explaining it to people, it's like when you think US equities in general have like outperformed a lot of the world, you know, in Europe, UK, so it kind of makes sense that all of these portfolio managers have got all this excess profit in dollars that they then need to sell, right? They sell to balance their books, so they buy euros and buy GP. So that sort of makes sense, and we've seen that over the last couple of months for me, you know. Right. Yeah, no, agreed. I mean, I don't know how, because you know all these banks have these like mathematical models where they do all this fancy stuff. No idea how that works, but like you say, when you see something outperform, there is always a risk that you're going to see some selling in that asset or in that currency at the end of the month, like as people like reallocate. Yeah, exactly, dude. And then really the last main talk point, I guess, this week's the FOMC. Their minutes of their last meeting, I think quite extremely dovish there in terms of this tone still, right?
Yeah, I mean, like, I don't think it really, in terms of the dovishness, I don't think it really said anything we didn't already know, because we know they're super dovish, but it just gave reassurance, because like in the days, I actually thought this was weird last week, I remember, in the days leading up to these minutes, a couple of these Fed members were actually talking about, they weren't talking about raising rates again, but they were talking about, you know, the economy improving and maybe withdrawing some of that stimulus like down the line. And I think markets were maybe getting a bit like, oh, hang on a minute, why are you talking about that? Like,
true.
It's too early for that. But then, like you say, these minutes, super dovish. There's going to be either yield curve control or something like that, which is like, another dovish move.
They're considering it, aren't they?
Yeah, we'll see.
Yeah. Okay.
Exactly.
I mean, dude, I guess that's pretty much it for this week. What's the sexy stuff next week on the calendar?
We've got a bit of central bank action. RBA.
RBA, they expected to do anything?
Not expected to do anything, but it's quite, like, you know, the thing with the RBA at the moment is, do they think that the Aussie is overvalued, or do they want to pump it lower or pump it higher? So it's like, that's the thing that people will be looking out for.
But low.
Other than that, oh no, sorry, mate.
No, I was going to say low. The governor, I think it was last week, he said they're not bothered by the recent value rise in Aussie dollar right now. So, you know, it's got room.
Yeah.
To carry
on.
No,
he did say that. But then the only thing was, there was another person in the RBA, I can't remember who it was actually, but they were saying that they didn't like Aussie AUD USD above 0.70.
Really?
They mentioned that level.
Oh, wow. They were so specific. Yeah. That's interesting.
Dude, yeah.
Wow.
They mentioned, So that's why people are a little bit interested.
Yeah. Okay, cool. What else?
To be honest, mate, that's pretty much it. We've got like Canadian jobs data, which should be quite interesting.
Okay.
Sweet. But nothing really that important for anywhere else.
All right, bless. Sweet, dude. Well, man,
nice.
I'm shame it couldn't have been a bit more sexier, but I'm sure we'll get something else soon. But
mate,
nice
we
one,
will.
Dude.
It can't...
Lit, stay lit,
nice
baby.
One.